YouTube. This is just going to explain gaps and what is gap filling. So a lot of you may have heard of something before like called wick or wick filling. That is a thing. That's not this video. That's a totally different concept. But gap filling is also a concept similar to the idea of wick filling, where you're going to see a retracement of the market. It has to go back and like answer for a massive move. And there is a way to do it. Please do not go and just trade every single gap and think that it's going to like instantly go back and retrace that gap. You'll get burned, I promise you will. But when you see a gap that meets the criteria to be able to fill it, you should be intrigued by it. So this happened recently, just yesterday, when Asian session opens for the week. This is a huge gap. For reference, so you guys can see, I'm on a 15-minute time frame. The gap prints on any time frame. So you have over a 500-point drop in the market, literally just opening. So what that means is that 1 minute from when the market went from being closed to being opened, this market dropped somewhere between 300 to 500 points instantly. That is huge. That is a massive drop. If you were somebody who got caught up in this hot mess and you were in the wrong side of it, because it was a very bullish market, you'll see that the market was trending up. So if you were somebody who was holding and you were like, man, I'm trying to hold for this buy through the weekend, hopefully it gaps up. It didn't. It gapped down. So that sucks for you. Please make sure that it's a significant of enough gap before you're even interested. Like something that's small, especially on the indices, like something like 50 points or less, not really that interesting of a gap, and I wouldn't really suggest being intrigued by it. Something that's like 500 points at one point, that's huge and should definitely pique someone's interest. But it's not enough to solely just say, okay, well, this candle printed, let me go ahead and just buy now. Although this candle is fantastic and I love this candle, it's not enough for you to just say that alone that you want to go ahead and buy, because you have no clue if the market is just reacting to this massive gap. So you need to have other confluences. So make sure that when you're gap filling, that you're not just going on a whim and you're like, oh, there's a gap, let me fill it. Christy says she fills gaps. Like, that's a terrible idea. And you're going to blow up my comments saying you lost money. And I'm going to be like, what were your other confluences? Here's what you need to do. You have to start using a little bit of technical analysis with this, but it's free, so go ahead and use it. Basically, I drew a very, very simple idea of just a trend line to show you guys that it was obviously in a bullish market before market closed. This is your closing candle here. That's when market closed on Friday, and that's the price that it closed at. Then come opening, you're all the way down here. So this whole entire area just got totally unanswered for. No idea what happened. That just opens here, down at this price. When it opens at this price, your thing that you want to look for is, why did it open at that price? You got to start doing some critical thinking here and be like, why did this candle open here at this price? Like, why would the market makers send this go flying down here? Like, what happened? What are they looking for? What was the point of that? Look to your left. You have a very strong zone to your left, where I'm sure a lot of people probably missed this massive push up. And with all the craziness going on in the world and the news, they were probably all like trying to get on board with this. Probably waited for some sort of breakout. Maybe they got in a buy somewhere in this area, took the buy all the way up here, right? Where would your stop loss be? Most likely a ton of people's stop losses are somewhere under this zone, somewhere in this area. That's what they're looking for. So when you see this candle print in this massive rejection wick, you have to think to yourself, like, why were they dropping the market this much, this fast, before it even opens? Like, what were they looking for? And what they're looking for is, I mean, truthfully, liquidity. So they came to this zone, but they didn't just come to test it. They didn't just come and bounce around in this same area. They came just enough under it. So meaning anybody who has stops all in this area, they came just enough under it to grab what they need and then go push the market in the direction they want to fill the gap they need. They needed the liquidity to be able to push it back up and go against this huge, massive drop down. If those words confuse you that I'm saying, that's okay. I understand it can be a difficult concept to start understanding, like liquidity and all these other things. All you need to know is that, is there an area to the left that they were looking for? And they were. Did they try to go a little bit under it? Probably, because a lot of people have stop losses and things. The market wants to take your money. That's the reality. They need your money in order to take the market and push it the way they want. So after it prints this candle, you get this beautiful rejection wick, which if you don't know how to read candles, I'll post a little chart here, but this is definitely a strong rejection wick, and it's also a clear indication of a reversal candle. So if you don't know candle reading, please go learn it a little bit, but I'll show you a couple of examples. I'll put a picture in here of what reversal candles look like. So that's like what you would be looking at when you see one of those. You should have those big hearts in your eyes, because now you already know that you have a massive gap that you want to fill. You're like really interested in filling it. One, a break of a trend, which is clearly a break of a trend here. You have a break of your trend line. Your second confluence, that you've had the retest of a previous zone, a strong zone to the left, and you've had even a dip under it, which is kind of like your third confluence to say, like, you know that they collected liquidity under this zone here. Then the fourth confluence you have is that it is a reversal candle. Like, it actually closes as a strong reversal candle with that nice rejection wick. And then you should wait. I know that you guys are like, well, that's 4 confluences. How many do you need? Gosh, you should wait. You should wait because you have a massive wick here. And although it's not always the case, a lot of the time these massive wicks do still get some bounce around. And this comes into that, like, it's a very basic rule of thumb. Don't follow it all the time, but it comes into that wick filling concept of like somewhere between like 25 to 50% of the candle that you would potentially have to fill. That's a different concept, and I don't want to get into it here, but basically knowing that you have a massive wick like this, you would probably assume that you would maybe be coming back down to fill about half of the wick. It doesn't always happen like that. Sometimes you do shoot straight up, but it's not a bad idea, and I would be using an indicator at this point. So you've done 4 confirmations on your own using technical analysis, using your own head. At this point, I would be using an indicator for a 5th confirmation on when is the ideal time to get in. The indicators are always there to help and guide you. I obviously can trade with or without any of them, but and this would have worked out with or without any of them as well. But the stop loss is where you would have probably struggled a little bit if you got in at the close of this candle. I don't think a lot of you would have put your stop loss all the way down here. And that's where I want you to use an indicator potentially if you can. So as far as finding the entry, I have a couple of ways here. There's free or there's paid indicators, whatever you guys want. It works either way. It's not about indicators, this whole idea. It's truthfully more about using your technical analysis, but the indicators are going to help you get in at a more ideal time. So if you just used TA, no indicators, and we hide them all, you would probably have gotten in at close of this candle, right? So maybe here. You may have gotten stopped out depending on how heavy you put your stop loss. If you put it all the way at the bottom of this wick, I mean, you could have, but that's a 130 something point stop loss, but you could have, and you may have been totally fine there. So that's a possibility for those of you who are like totally into naked trading and you don't want any indicators. No worries. As far as I go, I mean, like I said, you already have 4 confluences, strong ones, telling you why you could get in at close of that candle. However, well, let me hide this guy too. You don't need the stars. However, you can use them to get you in at a better and a more ideal time. And what I'll show you is so totally free. This is all free stuff. BJTSI is a free indicator, and so is stochastic RSI. They are default settings. So that's stochastic RSI set to default, and the BJTSI is set to default. So I'll scroll through so you guys can see. I didn't change anything on them. That's just how they are. I didn't change the style or anything. So anyhow, basically, if you were doing this just basic naked trading, you would have gotten in at the close of this candle potentially, right? Taking your long at the close. Maybe you put your stop way down here. And then what you would do is target your take profit 1 for filling the gap. But when you're filling the gap, you want to make sure that you're not being like too greedy. So obviously all the way up here would be filling that full gap. I actually went around in this area because I feel like when I was looking at it, the gap is pretty significant from here all the way down to here. But there was the market to the left not that long ago before market closed that like price was in that area. So obviously you get it. You hit your take profit 1. And then I did set a take profit 2. I did take 2 positions. I'll post them up at the end of this, but my take profit 2 was to actually test the high. So I had take profit 1 in this area. So take profit 1, because that's kind of the more conservative area where you say, okay, there's like a little zone there that's kind of like right under the trend line. You don't want to be too greedy because just in case it reverses or whatever. And you're also, in this case, I was getting in an Asian session at the very beginning of market opening. So remember, you don't have all the volume you need there yet. London's not there to play yet. New York isn't there to play yet. So you want to be kind of smart about where you're putting it. By the time London and New York come in, which for me is like around 3 a.m., you can see in here, and then again around 9 a.m. when the indices open, that's where you're getting some movement happening. But until then, you want to be kind of smart about it, secure your money, make sure you're making smart trades. So take profit 1 seemed like the more realistic trade, and even with take profit 1 area, I was well within my risk to reward. I believe I'll show you guys. I got in a little bit later, but basically if you were naked trading, you'd still be, if you're targeting this area, like well above 1.5. Take profit 2 would be up here trying to make like a new, testing the swing high. And that's also, again, another great risk to reward, like another 1 to 2. So if you got take profit 1 here, when it hits take profit 1 and you had, say you had 2 trades running or you were taking partials, at take profit 1, you would take out either 50% of your trade because you're doing partials and then secure the rest. So meaning move your stop loss then to break even and let take profit 2 run. Or if you had 2 trades running like how I do it, where I like call it stacking, then you would have closed 1 trade out at take profit 1. Then you would target take profit 2 for your second trade that you have. But you would make that second trade risk-free as well. So you would move your stop loss to break even. That's how you would do it if you were just naked trading, totally not worried about any indicators. If you wanted to wait for the indicators because you want that 5th confluence, that's totally understandable, and I do actually do that. So that's something I do. So you want to see that the stochastic RSI had gone oversold, which it did, and is crossing back up. It crosses back up here where the K and the D line come above that 20. That dotted line on the 20, it comes there, right? On this candle, technically you would have met the stochastic RSI requirements, but your TSI still has a red cloud. You're not crossing, so you don't want to get in here. Your TSI is like, not yet. There's still probably something happening. So you want to be waiting for your TSI to confirm it. So then you have it happen here. So you get that little drop down again, and then your stochastic RSI recrosses back on this candle, and at the close of this candle, you can see on your TSI, you have a blue cloud that would have been forming. So at the close of that candle, you could have gotten in if you wanted to use the 5th confirmation to why you should take this trade. And at the close of that candle, you could have had a tighter stop loss because you now had a little zone that formed, and you've already done a little bit of a retracement of that wick, more than half of it. So I would have been comfortable to put my stop loss there. In this case, same thing again. You're not going to target 1.5 or anything like that I normally teach. You're going to use your gap to your favor. The gap is what's going to help you here. So this is where you're going to target the gap. Same thing though, you want to be kind of like in this area where that first zone is. Be smart about it. Take profit 1 is still around the same zone as what it would have been. You're just going to get a way better risk to reward by using the indicators because now you have a tighter stop loss in this situation. Now you're risking 1% to get 3.22% potentially back for your take profit 1, which is very nice. If you want to take partials, you would take out 50% at take profit 1. So you would secure like 1.7%. So then you would let the remainder of it run to your take profit 2, which is up here, to test that high and see if you could get that take profit 2, which is also another very good risk to reward. So like you would have gotten the first one at your take profit 1, you would have gotten your like 3.22% area. And then once it hits that, you either take 50% of your trade and let the remainder run and then move your stop loss to break even or slightly in profit. So you're completely secured no matter what. You would have made 1.7% reward or so on this, and then you could let it run and try for take profit 2. Or if you had like 2 trades running and stacking it, you would close your first one out at this take profit 1. Your second one would be set to take profit 2. And once your take profit 1 is hit, set an alert for yourselves. Like you can set a price alert. And this is something I do a lot for my take profits. Like just set your add alert. If you click on the price here, the little plus sign, when you highlight it, you can add alerts for that stuff. Just hit add alert. So that way and you can get rid of them by just clicking on them too, by the way, guys. But if you right click them and you can hit stop. But when you do that, you can move it around as well. If you're like not sure, just drag it and drop it. But when you do that, that way when your price is hit, you can set the terms that you want to happen, like how you want to be notified and all of that stuff. You save it. I don't want to save it because it's already been hit, but you guys get what I'm saying. You could set the alert, and then that way you know take profit 1 was hit for you. So now you can come in, move your take profit 2 trade that is still running, move that to break even. That's how you know, so that way you guys aren't risking too much, and you're making sure that whatever you made off take profit 1 you make, and then take profit 2, if it hits, awesome. If it doesn't, no big deal. You made your money off take profit 1. And then there is an option for a take profit 3. I only did a take profit 1 and 2 on this, but there is an option for a 3, which would be basically when you're drawing your trend line, drawing it, extending your line out, and then drawing like the take profit up to that line, like where it meets. So you can see it meets it there, like the edge of it meets it there, and that would be like a take profit 3 zone for you to target. I did not take this, like I just said. I did not want to over risk on my account, but you know, and I've already filled the gap. The point of this was just to fill the gap, not to go and like do a crazy runner. But you guys, if you wanted to hold me on that and you were like comfortable and you like wanted to just see what you could do, you could always target like a take profit 3. But yeah, that's just using the trend line itself, like trying to target the trend line for a take profit 3. Okay, guys, so that's just kind of a quick review of like gaps and how you can trade it. You do not need to have anything fancy like indicators or paid stuff. This could be totally done free. Or, I mean, if you do have a strategy as well that you like and you are just waiting for certain confluences, you could also use that. I personally did actually trade this. I'll show you guys. I'll stick it up here, my 2 trades. They have already closed out. They did finish running. I did hit my take profit 1 pretty early in the morning. I want to say like somewhere in one of these candles. So I woke up to the profits, and then I saw the opening did well. So I was happy with opening, and for US indices opening, it's good. And then it did hit on this candle around 10:30 in the morning. Yeah, that's how you would fill a gap. Okay, guys, that is it for this video. I hope it helped you guys, and I will see you in the next one. Bye.